Stocks here headed higher for a second day now. Will the market hold on to this momentum? Brian Belski is chief investment strategist at Oppenheimer Co and says, though some bulls are getting a little fidgety here, he still sees the S&P 500 at 1,300 by year-end. Joins us now with his take on the market. Hi there, Brian. Great to see you.
Nice to see you, Lori.
All right, so what's going to drive, what factors, fundamentals will drive the S&P to 1,300 by year's end?
You know, fundamentals and earnings, you know, when you see this type of recovery, it's pretty classic recovery with respect to stocks leading, then the economy. And we see the economy clearly after the GDP print that we saw on Friday that starts to provide some supporting evidence that stocks are really heading in the right direction. But from here on out, we've kind of walked the walk. Now we have to talk the talk, meaning that stocks have gone up. Now we have to show that we're actually growing in terms of earnings and revenue, and we actually think that we're seeing that. So the leading areas that we believe, according to our work, that are the best position to grow coming out of this continue to be areas like technology, industrials, and healthcare.
Want to get right to the financials because, as you know, a lot of uncertainty about what's in store for financial reform. We're expecting to hear from Paul Volcker, outline his Volcker rule to the Senate Banking Committee this afternoon. So how is this from a market perspective going to sort out? And are we already seeing an impact on the markets, the financial sector in particular? You
know, we are already seeing an impact, and we kind of saw this coming with respect to our work over the last several months in terms of not being significantly overweight large cap financials because of the indecision we thought in the volatility that could and most likely should be enveloped with respect to the potential for regulation going forward. I like to call it the specter of regulation. You don't really know how thick it's going to be or what kind of impact it's essentially what it will precisely have on the sector, but it will have some sort of an impact.
Do you think the financials industry, the financial sector will be such a huge weight as it is today, say a year from now, if these proposals, if these financial reform proposals ultimately get passed?
Well, that's why we're market weight. That's why we're neutral. We think actually the weight of the sector is probably where it will be for the next few years. I think for people that have been investing for 20 or 25 years, it's really hard for a lot of us to grasp that financials are not going to lead because we've always learned that financials are going to lead. But given all the situation that we've had coming out of the bubble and the issues that really were partially created by the financial sector, we think it's going to be a while before financials will actually be ready to grow fundamentally, number one, but number two, be able to lead.
All right, so getting back to the walk and talk the talk comment, in your latest commentary, you say 2010 will be a year of back to basics investing as investors focus more on fundamentals as opposed to momentum and technical. So are you actually seeing evidence of this, and where?
You know, we are. One of our major themes in terms of our outlook for 2010 was that stock correlations are likely to fall. What does that mean? Well, price performance was very correlated in 2008 as everything went down together, and in 2009 it was very correlated, meaning things went up together. As this recovery begins to mature, you will see more companies come out at different levels of fundamentals, so you, the investor, will appropriate different levels of performance. That's exactly what's going on in terms of performance dispersion, meaning the price performance of companies are beginning to spread out, and we're becoming more of a stock-picking oriented market relative to ETFs and indexing that has really controlled most of the performance the last few years.
So if I'm an average investor, how closely do I have to ride my stock holdings then?
Well, you have to watch them in general, but we really want you to focus on fundamental investing, not just buying ETFs. You want to be more precise in terms of buying a drug company versus a drug ETF per se.
Okay, got it. Also newsworthy today, the president earlier announcing a $30 billion small business lending fund to help out small businesses. In terms of your concerns, in terms of hurdles for the market, how concerned are you about this small business segment and lending and its ripple effects through the greater economy?
Well, that's really where the leverage comes from, Lori, in terms of where the growth is, and that's why we're in fact overweight mid-cap financials, because as employment comes back, C&I loans will come back, and as C&I loans come back, that'll have the biggest kicker, quote unquote, with respect to growth for mid-cap financials. And I think that's where the leverage is as we start to see business loans start to come back, because tightening standards have become to loosen, credit spreads are very attractive. So I think we're going to start to see more lending as the year unfolds.
Another concern, unemployment. Right? That's the big red flag. We're going to have the January jobs report on Friday. How important is it to overall market psychology that we get a net jobs gain for the month of January?
It's key from a let's say optic standpoint, but the actual unemployment rate, Lori, is actually a leading indicator. What you really want to see are jobs for the month, right? Weekly wages, temporary workers, and weekly jobless claims. Those three indicators continue to improve, and they're the leading indicator part of employment. We would expect that employment continues to improve, and that will drive the consumer and ultimately drive the economy.
Okay, we'll leave it there. Brian Belski, Managing Director and Chief Investment Strategist with Oppenheimer. Thanks so much for your time. Appreciate it.
Thank you. Yes.